All right, all right, all right. So here I am. I was on actually a few moments ago, but this is my first time using this particular app to go on multiple platforms. So I was having a little bit of technical difficulties, but I'm Shane the negotiator and I figured it out. So here I am. So I wanted to do a live for you guys because today is January 23rd and it's the official tax filing season begins for individual filers. So I just wanted to talk a little bit more about that, the types of documents that you're going to need to file your taxes, a few updates, and we're going to kick off tax season. So I know how you guys love, 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 love tax season, or it's probably just me. But, anyways, I'm going to talk to you about it anyway. So, before we get started, let me just introduce myself for those who may not know who I am. So, I am Shane the Negotiator, the CEO of Profit First Taxes, and I do help individuals and businesses, mainly coaches and consultants and service providers, to scale beyond 6 and 7 figures using legal tax and accounting strategies. And I'm going to talk to you a little bit about some of those documentation that you're going to need when it's time to file your taxes. So, first of all, once you found your professional to file your taxes, you're going to need to bring a few things with you. So, you're going to need a photo ID. So, it can be your driver's license or a state ID, some type of documentation to prove you are who you are, social security card, and for all the individuals, the taxpayers and the dependents that you are going to be using to file on your taxes. You're going to need the birth certificate, the birth date for your spouse and all of your dependents, and possibly the birth certificates for your dependents. The bank account and routing number, you're going to need that for or a voided check for if you are expecting to get a refund. Also, if you want to make any payments with your refunds. You're going to also need, if you are a new to this particular tax firm, you're going to need your prior year's tax returns. So you're going to need your 2020 and your 2021s if you filed. If not, the last two tax returns that you filed, you're going to need to bring that in. And it's best to have this because if they haven't filed your return before, they don't have a history of knowing what you tend to file, what you don't file. So it's a good idea to bring those so that they'll have some type of reference point. If you are an existing client, then they already have that information and you most likely don't need to bring that. You may also need an identification protection PIN, which is an IPPIN. So this is a PIN that's normally used in place of a social security number. It's for identity protection purposes and is issued by the IRS. So we're going to talk about some of the other documentations you're going to need when it comes to income. So all documentations when it comes to income you're going to need. So any sources of taxable income that you have made throughout the year, that is what you're going to be bringing with you. So I'm going to list a couple. You're going to need your W-2 form. So by now, your W-2 should start rolling in. If you did not receive your W-2s or your 1099s and many of these forms that I'm going to explain to talk about, then you should wait to file your taxes because it's very costly to have to do an amendment if you forgot something. So the amendment, I know my amendments cost the same as if I was filing your original return because it's the same amount of work. So it's best to wait until you have everything that you need and then you provide all those documentation so that everything is just getting filed at once and there's no mishaps. So W-2, that's what income for income. And if you're self-employed, you're going to need your 1099 NEC. So that's non-employee compensation. You're also going to need to bring in those 1099Ks. So earlier in 2022, the IRS had lowered the threshold to $600. So it was saying if you made at least $600 from those third-party payment processors like Venmo and Cash App and all those other platforms, they were going to issue you 1099Ks. Previously, you had to reach 20,000 before you would get those 1099Ks. However, there's been a pause on that, so you no longer have the $600 threshold. It's back to 20,000, but you should still report that income even if you don't receive that 1099. So You're going to need records of income not reported onto any 1099 form. So if you receive cash payments or anything that did not go on any 1099s, you still need to bring in that documentation. So you should have it, written down somewhere or to show the total amount so that you can add that to your taxable income when you file your return. You're going to need records of your expenses, like your receipts, credit card statements, etc. So ideally, if you're a business owner, you should have some type of documentation source set up. So for you to be able to get your profit and loss, or P&L is the short version of it. So I know QuickBooks is a popular one. Sometimes people use Wave or Zero or any one of those platforms so that you can track all of your income and your expenses, and then you can generate a profit and loss, which I like to call it a nice little report card for your business at the end of the year, and you use that to file your taxes. Record of estimated tax payments. So if you were expected to owe at least $1,000 in taxes, then you should have been paying estimated tax payments. And I'm looking over here to make sure we are actually recording and everything is going good over there. Yes, you're gonna need some record to show that you've paid those payments, because you have to put that on your taxes. So if you did not expect to owe, you may not have paid those estimated taxes. If you were a C corporation, the threshold was $500. So then you would be expected to pay those estimated tax payments. Now, keep in mind, don't forget, if you are a partnership or a S corporation, you don't actually make any estimated tax payments, because that type of structure does not pay taxes at all. You, as the individual, the shareholder or the member, pay the actual taxes and estimated taxes for yourself when you file your taxes. We're going to also need retirement or disability benefits. So if you are receiving Social Security benefits, you're going to want to bring that SSA 1099 that you're going to receive. You're also going to need your pension, IRA, annuity income, which comes on the 1099-R, which stands for retirement. We're also going to talk about unemployment. So I know 2020 and 2021 were big years for a lot of unemployment because of the pandemic. Not so much for 2022. However, you may still have received unemployment income. So you should be get issued a 1099-G, and you're going to have to bring that with you also. We're going to talk about the tuition stuff now. So if you have scholarships and fellowships, you would be receiving a 1098-T, and that is going to tell you how much tuition that you have paid, or if you received any scholarships, it's going to have that on there. Income of loss from sale of stock, bonds, real estate, etc. So you're going to get, those 1099-B. So I know a lot of people are doing crypto. You're going to on Robinhood or Cash App or any one of those platforms that you're doing crypto and doing stocks and bonds, and you're going to want to bring those 1099-Bs. Even if they don't issue that, you still should get the printout from those providers to show the exchanges that you made, the monies that you put in, and whatever you cashed out for 2022, because you're going to have to file that on your taxes. So keep in mind that even if you didn't cash out and you might have been reinvesting your cryptocurrency or your stocks, you may still have been receiving dividends, and that is still a taxable event that you have to pay taxes on, even if it was like 10 cents here, 32 cents here, $1.20 there. Those are small amounts, and sometimes that taxpayers ignore because they're like, oh, I didn't take any money out, so I don't need to file that. But you do need to report that on your taxes. Okay, so we're going to talk about income or loss from rental property. So, if you're doing any type of rental, if you have a home and you're renting out rooms in your home, if you're renting out because you're doing Airbnb, or, you have rental property where apartment buildings, whatever it is that you have, and you have some type of rental income, you're going to have to bring that income in also. Also, alimony received. Now, the alimony is only if you received alimony up to 2018. So the alimony up to 2018, that's taxable, that you can actually, the alimony received, you have to report that as taxable income. The person who's paying the alimony out, they can get a deduction on that, on some of the payments that they have made. After 2018, that went out the window. So if you started receiving alimony as of January 1st, 2019, then this doesn't apply to you. You don't need the alimony stuff because it's not considered taxable income and you can't deduct it if you gave it. So I hope we're tracking so far. Statements for prizes or lottery gambling winnings. So if you go to Vegas in Atlantic City or wherever the casinos are and you've been hitting it big or you've been hitting it small, you have to report those winnings and you have to report those losses. So you can only write off up to what you have won. So for instance, if you won $15,000 and you lost 20,000, you can only write off up to what you won. So you can only write off 15,000. 1099 INT and 1099 DIV. So those are the interest and the dividend statements from your bank. So the threshold for that is generally if you receive any interest or dividends of at least $10, your bank is going to send you one of those forms. If it's less than that, then they're not going to send one to you, but doesn't mean that you shouldn't report it. Records for any other income. So if you receive any other income at all, you need to report that income. And this is income that's considered earned income. Because if you may have gotten disability benefits from like the VA, VA disabilities, then that's not taxable income. Then you wouldn't have to give that as of right now. So for your expenses, you may be able to deduct, taxable expenses. So you want to make sure that you have records of all the expenses that you've spent for your business. That's why I was saying it's a good idea to have some type of record keeping system or some type of system in place where you can track your income, track your expenses, and using those platforms like I mentioned, QuickBook, Waze, Xero, to really put those things in nice little folders so that when it's time to file, you can just be able to get the maximum amount of deductions that you deserve. If you have retirement contributions like the 401k or the IRA, you're going to want to bring that in also because some of them are deductible, some are not, like the Roth IRA, that is not deductible, but those 401k plans and those SEP plans like this self-employment plans and so forth, those are potentially deductible. So you want to bring that stuff in. State and local taxes that you've paid, mortgage statements and property tax bills. You're going to need like we talked about, the college tuition, the 1098T, childcare expenses. So this is including the payments, record of receipts, and the provider's name is what you're going to need. The address and their EIN number, either the social security number or their EIN number is what you're going to need for the childcare expenses. Of course, these are for people who have actually has children that are their dependents. Recipients for charitable contributions. So whoever you paid those charitable contributions for, especially if it starts getting up in those numbers, you want to write down who the recipients are. Medical and dental bills, that because it's possible that you can deduct some of your medical and dental expenses if it's 7.5% over your adjusted gross wages. And we'll talk a little bit about some of these in future videos or lives that I'm going to make. We're not going to really get into it today. Records for supplies used as an educator. So you can write off some education expenses. Of course, there's limitations to that. Again, we'll talk about that another time. Other documents that you're going to need are Form 1095A. So this is if you have health insurance from like the marketplace, then you want to bring that in because you're going to need to provide that to show that you've had insurance for either the full 12 months or how much ever months that you had it and whatever premiums they paid on your behalf, and also whatever amounts that you might have paid because you may have had a deductible or something of the sort. So that'll have that information on that 1095A. Generally, everybody else receive what I think is a 1095B, and that is if you did not use the marketplace and you went and got health insurance from your job or on your own, then you would have a different form. If you receive any of the IRS notices, 1444, 1444B, C, those are your economic impact payments, for the shortened words, the STEMI, because everybody know what the STEMI is. You're going to need to bring those letters in if you still have them. And this is if you did not file all of these in your 2021's taxes or your 2022, you're going to want to bring those letters in because you want to be able to get your stimulus if you haven't gotten it as yet. The IRS letter 6419, that's for your child tax credit advance payments. That was last year's. We're not doing that stuff for this year's. Unfortunately, your taxes are going to look very different this year than it did last year. So last year we had the advanced child tax payment where some of the taxpayers received the last half of the year, sometime around July up until December of last year, not last year, of 2021, you receive some advance payments. And then finally, when it's time to file your taxes for 2021, when 2021 taxes, when we filed it last tax season, you were able to get the other half of that advance. Now, this year, we have gone back to the regular $2,000 for the child payments. It's no longer that big fancy number that we were getting before. So the people who had gotten a big refund last year, your refund is going to be significantly different this year if you tend to get a refund. So those $20,000 refund or $30,000 refund is likely not going to happen at this point in time. So don't be surprised if you generally got like $15,000-$20,000 back and you're only getting back like 8,000 or 3,000 or something like that, because all of that money that was given out during the pandemic, you didn't get that anymore as in 2022. So there is nothing that you can't claim that stuff on your taxes anymore. The only way you can still get that is if you did not file your taxes last year and during last tax season, you didn't do your 2021 taxes, then you may be eligible for some of those. But if you're filing 2022 taxes that starts today, you're not going to get those things, and your tax returns is going to look very, very different. So I just want to look to see if we have any questions in the chat or any comments. And I don't see any at this time. So I am streaming on multiple platforms. So I am on Facebook, and that's personal and business, and I'm also streaming on YouTube. So if you have any questions, pop it in any of the chats, and I'll be able to see it and answer it for you. Okay, so what other things am I missing? I think I pretty much covered all of the forms and documentations that you're going to need, and also come with whatever questions that you may have for your preparer. It's a good idea to ask your preparer questions to really get to understand. Once they have filed your, one thing I wanted to before I get into that, before I forget, if you owe child support, if you owe back taxes, and if you owe the IRS any type of funds for any reason, and you are expecting that your refund may get offset, you definitely want to disclose that to us when we're filing your taxes, especially if you want to pay with your refund, because it's kind of shady if you're going to know that they're going to snatch your refund and you're going to I want to pay with my refund, and then you don't get an actual refund, and then you don't get to pay your professional either, because then we're not going to trust you the next year when it's time to file your taxes and you come talking about, I'm paying my refund. The answer to that's going to be no, because you're now not trustworthy. So if you do have back taxes, or you have situations that your refund may get yanked, just be honest and say that, and we could probably work out some type of payment arrangement or something of the sort, or you may have to pay up front. Whatever the situation is, don't be shady about it. So do disclose that. So any letter that you received in relation to your taxes or your employment or your business, you want to bring that in so that you can give that to the preparer, so they can have everything about who you are and your family situation, so that they can file your taxes. So if you guys don't have any questions, you can always, drop it in the comments after the live even ends, and I will come back and answer them for you. You can also reach out to me, and you can email hello@profitfirsttaxes.com, and I can possibly answer some of your questions there. I don't really answer questions so much in your inbox or anything like that. It's generally questions like relation to the things that I've talked about. Otherwise, you'd have to schedule an appointment. So my appointment link is written there, bit.ly/SD negotiator. And I can assist you there. There's a couple of options. There is for 15-minute strategy session, where this is not a consultation. It's just for us to get to see how we can work together. So you tell me about your situation. I can tell you if I can work with you, if I can help you or not. And then we decide if we're going to work together. If you have more in-depth situations that's going on, you have specific things that you need help with or you want to talk about, then you would choose the other appointment for a consultation. It is an investment of $125 and it's for 30 minutes. You, of course, if you need more time than that, then, we can work that out as well. And then, of course, if you are a current client of mine, you can just start onboarding yourself in the portal that we're using. Or if you need an appointment, you can always schedule through the current clients. So thank you guys for listening in and tuning in on this live, and the ones who are going to watch the replay. And I am looking forward to having an awesome, wonderful tax season with many of you. And until then, you guys have a great day.